GMR Infra has reported March quarter's number. If you look at the full year performance, we're looking at a 13% downtick coming in from the company. The losses have widened to 3,466 crore as compared to 1,083 crore, but that's mainly on account of the exceptional loss that we have witnessed in this quarter. To take the discussion forward, we have the management of the company, Mr. Saurabh Chawla, the ED Finance, and Suresh Bagoria, the GCFO, Finance and Accounts of GMR Group. Hello and welcome to Bloomberg Quint, sir. Hi, this is Nikki. I'm going to start off by asking you about these exceptional items, which is to the tune of around 2,212 related to your Rajahmundry and Chhattisgarh power project. Could you explain about these one-time expense and also if they're reversible in nature?
No, it's actually a one-time expense, and if it gets reversed tomorrow, would be only if at all they turn positive and we get positive signals from the industry. Otherwise, we have kind of gone with the fair valuation approach of our business, and based on our future forecast cash flows, we have fair valued our assets, and based on that, we have kind of taken a call to write off our entire investments. So it's a one-time in nature.
All right, sir. Also, sir, the company's current debt has gone up by 14% on consolidated basis to the extent of around 23,962 crore in FY19. I do understand the company has signed in an agreement with 3 marquee investors in this financial year itself, which brings in an investment of around 8,000 crore. I'd like to understand what's your plan going forward on deleveraging right now?
So I think when you look at GMR, you have to look at consortium of multiple businesses, and then you have within that multiple companies operating in it. So a consolidated debt number at GMR Infra level does not truly reflect what's really happening on the subsidiary levels. So for example, if we were to take airports as a case study, airport it's growing, right, and we need to put capex into place to cater for that growth. So last quarter we raised a bond in Hyderabad airports of 300 million for growing the capacity at Hyderabad. Similarly, in this quarter we have raised up 350 million US in the Delhi airports, DIAL, again to grow the capacity to 100 million passengers. So now this all adds up to the consolidated debt, which is not reflective of what is the underlying health of the business is concerned. What is really reflective is what are the bond holders today talking about. So just to give you a little perspective, in DIAL, an issuance that we closed yesterday, against 350 million US, we had a demand of 2.4, 2.5 billion. Okay, and these are global investors, and this is high yield, non-investment grade bonds. So leverage itself has no meaning. In a consolidated accounts, you have to look at entity by entity. Having said that, we had embarked ourselves to actually deleverage at the corporate level. So within GIL itself, because it's a holding company, we had taken debt to support our expansion and issues at the subsidiary level, especially in the energy space. We have now signed binding agreements with Tatas and GIC to sell a part stake in our airports platform, and we will deleverage our corporate balance sheet where you do have cash flow mismatches that happen because it's at the holding company. So once we correct that, we are very, very well positioned to actually grow the business at the entity levels, both in the airport space and other verticals also, as things settle down, especially in the energy and in the road sectors.
All right, sir. Talking about the operational performance for this financial year, we've seen a more than 20% downtick. I'd like to understand what can be expected going forward in FY20.
Well, we don't give guidances, for the future. What we can surely tell you is that in the airport space, business is looking good. The number of passengers, the growth of number of passengers opting for air travel is growing at mid-teen levels. There will be hiccups, there will be blips. Some airlines will do well, some airlines will not do well. But for long-term plays like infra play, you have to look at what is going to happen over the next 20 odd years. Investors We only want investors who want to play that 20-year game. So the underlying in the airport business is very, very strong. Even in the energy space, we are an energy deficient country. We have had problems in the recent past. Once those problems play out, you will see again growth coming back in this sector. Our plants are now reporting much better PLF than they were 2 quarters back. If you have to look road sector, that itself is growing at about 15% now after seeing some difficult times in the recent past. So the underlying business is doing quite well. With some of the write-offs that we have taken, these are exceptional one-time write-offs that we have taken in our books. We have actually also removed uncertainty from reporting perspective. So as we go forward, I think by end of this fiscal year, you'll be seeing a very, very robust growth machine in the infra space with very well, I would say, forecasted earnings and revenue by analysts. We don't do it, but of course analysts will be able to forecast that as we go forward.
The last question that I have is in FY 2019, GMR Airports had a throughput of around 102 million passengers with a growth of around 8% over the previous financial year. I'd like to understand what is the growth forward that we can expect for FY 20, if you could put a number down to that.
Well, as I had indicated, you should assume growth of airline passengers anything between 10 to 15%. It's difficult to forecast exact growth numbers, but between 10 to 15% is a secular growth in this sector. And this I'm saying primarily to discount any disruptions that may come because of stress issues in some airline businesses. But the underlying growth is there. This is a shadow consumer play. As disposable incomes continue to rise in the country, more and more people will travel by air, whether it is in secondary cities or in the main trunk routes. So I think from forecasting perspective, you can assume on a conservative basis about 10%, on an exuberant basis somewhere about 15%, take an average 12%. I think that's a fair play.
All right, gentlemen, we'll leave it at that. Thank you so much for taking out the time to speak to Bloomberg Quint.
Thank you.
Thank you.